Okay, thank God I checked comments. I went to the comments to see uh, if the audio was working properly, so I didn't continue on here. So thank you for the audio check. Sorry about that, Frank. Sorry I sent out the wrong link. I apologize. I am aware of how I did that, though. So my apologies. All right, so we have the E-minis that tried to move higher after the Fitch, not the Fitch, the Moody's downgrade on Friday after the close, and they were not successful. They tried really, really hard to push this market positive. And what we're going to talk about later on is the reaction of the market, both the bond market and the equity market, to the Fitch downgrades back on August the 1st. And we'll see where we are now relative to that point in time as well. So let's say hello to folks. I'll skip over all the no sounds. I got that. Thank you very much. Appreciate it. RB, hello. Jeff, hello. Thank you, sir. Sean, welcome. Thank you. Uh, it's okay. Yeah, I'm having a lot of them lately. And technically, I'm not a boomer. What do you? I'm a Gen X. I think that's I fall into the Gen X. uh, when you can hide the steak under a baked potato, it's too expensive. That's a good one, Larry. Very true. TF Hatter, welcome. Sean again, welcome. Trader Isaac, welcome. Okay, let's get to it. All right, so we know the E-minis are down slightly. Let's take this audio off. Ugh. Audio, where's audio? Oh, here it is, off. Good. Okay. Okay. We're good. Okay. So that's the E-minis. Let's check in with the NQ. That's the NASDAQ 100. Let's just type it in. And we are down 0.11%. I got to be honest. This is not a horrible reaction to the news. I guess it paid off to announce it after the close on a Friday afternoon. Checking with the Russell 2000. They are down a little bit more than the larger cap names. Let's check in with the dollar. And the dollar, as expected, is getting walloped. So I suspect that we should see strength in the euro. Yes, we got that. And the euro on a weekly time frame last week did not have a good close, nor did the Japanese yen, but I suspect that this is a major catalyst. The downgrade is a major catalyst for these currencies. And yes, we have even the Japanese yen up relative to the US dollar. So this is all good for the commodity complex. Gold rallying up over a third of a percentage point. I suspect silver is having a good open here, and it is up over a third of a percent. Nat gas. Nat gas even rallying here. And these two trades, the gold mining trade, the nat gas trade, hurt me last week. I didn't take them off. I didn't add to them, but they hurt because everybody wanted to be in the QQQ names, Magnificent Seven, whatever they're calling them. They didn't want these names. Now they're in demand. So good stuff. A good way to start the week off, assuming that they hold these gains. Now, sticking with commodities, remember what happens here. There's a cause and effect. All right, so we get the downgrade. So we have the dollar dropping. What does that mean for inflation? It goes up. Why? Oil priced in US dollars, gold priced in US dollars. Most commodities are priced in US dollars, and even oil, which had this is down, but it's rebounding. It's not benefiting from the downgrade at all. It's getting walloped, down nearly 1/3%, but coming off of its lows. Home heating oil, that's weak, thank goodness. Live cattle. Let's go to a weekly chart here. Broke support. Look at this. A beautiful break of support. My New York strip may actually go down in price. Awesome. Awesome. So we did silver. Let's stick with agriculture, weekly views. Wow. Corn prices annihilated last week. Continuation breakdown. Soybeans, bearish key reversal bar. Wheat, holding support, but not looking great. 50-50 here. Which way we go? So let's stick with, I'm just curious about commodities in general on this downgrade. Copper catching a bid. Let's check back in with gold. We gave back a little bit. But this should help us out going into the new trading week. Let's check back in with the equity markets. We'll go with not the Russell. We'll go with the NASDAQ. And pretty much unchanged. There's got to be a lot of conference calls going around on Wall Street right now, talking about how they're going to drive this market one direction or the other. So net, I think we need to put into context, where we're at right now. And the markets broke out last week. There was a significant breakout last week. Santa Claus rally, the November seasonality held true. It did so ever since the 1st of November, fairly strong price action. And what can you say? I had shorts on, I took them off, except for one was still short of Microsoft. Let's go to comments. Yoga Mac, oversimplifying here, but how could crypto getting cash? Take note during these cycles, but how about crypto getting cash? I'm not sure about that. I'm not understanding the question 100%. But how about crypto getting cash? I know it's getting bid. I know Bitcoin's up, but that's more due to speculative fervor that you're going to get an ETF out there. Tommy, welcome. YOLO. Hey, Yoga Mac. Yep. Bad news stocks go up. Hey, Bob, is it bullish on a stock ticker if call contracts exceed? Yeah, in general, you can look at it as a contrarian and say, you know what, there's too much over enthusiasm here. I would take that data and I would say, okay, how does it look relative to the chart? And if the chart is extended and you have especially very, very short duration options being purchased that are going to expire very, very soon on a weekly or on a bi-weekly time frame, that's probably a lot of speculative fervor and a lot of hot money out there, amateur money, buying uh, lotto ticket call options, betting that the stock is going to go up higher. Now, if I'm looking at call options that are going out 6 months to a year and have a lot of obviously time to go before they expire, and you're looking at a big, big position getting put on, well, I'd say that's more institutional money out there that's putting on that trade. So I would first start with, okay, what options are being bid? Is it short time frame? If it's short time frame, it's speculators. If it's longer time frame, it's probably large institutions. And I would then look at the charts. If it's extended, then you just have the late to the party buyers out there, and they're just buying lotto tickets, hopefully to 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 not miss the train on the stock. So you got to put it into context. All right, uh, Talon, welcome. All right, so we're pretty much done here. Let's just do a brief overview of the NQ up top. Yields. I didn't go over yields. What are yields doing? Yields are wow. Big move here on the 10-year yield. I think we're going up here to 4.69%. Equities can still rally. Equities can still rally even at that range. It's when you hit that 5 handle, that's when psychologically it becomes difficult for equities to rally. But until we get there, they could still rally. So, maybe we shrug this off, maybe we don't. I don't know. I'm not that smart. But given the price action on the week last week, equities should continue to rally up higher. Maybe we get a pullback and a retest, a higher low, and then we see a continuation rally. I wouldn't be running in this on Monday morning trying to short the market on this news. I will probably sell some puts on our Microsoft short and protect that position a little bit. But other than that, I'm not looking to really do all that much on the news until we get direction. If we start to see support levels broken on volume, then we got to say, okay, there's something here. Institutions are not liking this. Yields are moving up too far, too fast. Bonds are dropping like a rock. Dollars dropping like a rock. That's a crisis of confidence, and that's when you get very, very worried about your equity exposure. Right now, early stages. We need to see how this unfolds. Hey, Paul, welcome. Okay, let's get to it. I don't have a lot to go over here tonight, folks, to be honest with you. Going over our standard. Last week, I kind of knew there was going to be shenanigans afoot because we had very little in terms of economic data that came out last week. For whatever reason, the Fed heads were out there constantly last week, giving speeches, filling the void for lack of economic data. And there wasn't much in terms of earnings except for Disney, and really who cares about Disney? But this week, it's going to be a little bit different. We're going to have some market-moving economic data, and it's really going to begin on Tuesday with NFIB. That's the Small Business Optimism Index. Then you get the CPI, that's a Consumer Price Index, measure of inflation. Remember, this is a report for last month. Oil was strong this time last month, so the reduction in oil prices is not going to positively impact CPI until next month. On Wednesday, we get the PPI. That's the Producer Price Index. That's the level of inflation at the producer level. Retail sales, big, big number. Empire State Manufacturing, business inventories, more Fed heads. Initial jobs claims, we get that every week. Philly Fed survey, industrial production. We have a big week in terms of economic data coming out. A lot of it. Housing starts, building permits. So buckle up. Now, going into the new trading week, we have a S&P 500 that is just shy of a 30 handle on a PE ratio. Not cheap at all. We're going to talk about that more in a moment. Earnings coming out this week. We're going to get on. I would normally not talk about this, but Rumble, I'm very much interested in. Good management there, and I like the migration away from YouTube over to Rumble. Eventually, I will be streaming on Rumble as well if I can figure it out. I got to remember to take my microphone off of mute. So I got to get over that first, and then I'll segue over to Rumble. I'm not growing this channel at all here. I think my YouTube has me shadow banned something serious. I mean, no traction. Like, subscribe. It doesn't matter. It just doesn't grow. Nothing happens here. So before the bell on Tuesday, this is going to be a retail week. We're going to get Home Depot. That's it for Tuesday. Wednesday, more retail, Target, Advanced Auto Parts, JD.com. I think it's a Chinese stock. Cisco, Palo Alto Network after the bell on Wednesday. On Thursday, Alibaba before the bell, Walmart, Macy's. So it's a retail week here. After the close on Thursday, AMAT, that's semiconductor, not semiconductors, but semiconductor equipment maker. And what else? That's pretty much it. So it's going to be a retail week, but we are coming to near the end of earnings. Now, I always like to begin the week with the utter criminality that we have in Washington and the parasitic elite and what they have in store for a free nation. But let's begin first in Washington, and then we'll segue over into Davos. This is John Durham. He's the special counsel hired by Bill Barr, the AG for President Trump, to investigate the FBI. And here's what John Durham had to say as he was testifying in the House about Hillary Clinton, Barack Obama, James Comey, Clapper, that's the CIA director, and did I say Biden and Clinton, Hillary Clinton?
Mr. Jordan referenced the Clinton plan intelligence. Exactly the Clinton plan.
Based on declassified documents in the public record, there was intelligence information that was received at virtually the same time that the information came from the Australians. I mean, within a day or two. That intelligence included information that there was a purported plan designed by one of Mrs. Clinton's foreign policy advisors to create a scandal tying Donald Trump to the Russians. That's the essence of the intelligence as contained in the declassified information.
Did the president receive this intelligence?
On August 3rd of 2016, then Director Brennan had briefed the president, vice president, director of national intelligence, the FBI, the attorney general, and others.
When you say the FBI, you mean Mr. Comey?
He had, on August 3rd, it was conducted at the White House. It was Director Comey himself.
So Mr. Comey knew about this. President Obama knew about this. Vice President Biden knew about this. But it wasn't provided to the agents on the case or provided to the secret FISA court. Is that correct?
That's correct.
So what you just heard there, and I had to listen to this a couple of times, is, and I misspoke, it wasn't Clapper, it was Brennan that was the CIA director. You had a conspiracy between Hillary Clinton, James Comey, because they all knew the information was false. And they all kept quiet and they allowed lies to go to the FISA court to get warrants against President Trump, and his campaign, his family, etc. You had Obama knew about it. Biden knew about it. They all knew about it. It was all one big conspiracy. It was election interference, and ultimately, it was a usurpation of the incoming president's powers, authority by the elected people to run his administration. This is a coup. This is a preemptive coup against an incoming president. So the level of criminality that we are seeing unfold here has never ever been seen here before in this country, and nobody is really talking about it. Nobody really is getting offended by it. They'll get offended for misgendering, but they won't get offended by the fact that we had a president, a vice president, CIA director, FBI director, all teaming up with a Democratic operative, Hillary Clinton, a scandalous lowlife that allowed them or tried to usurp a incoming president and destroyed his first term as a president. And you go from this domestically, and then you go over to Davos, and you listen. This is a couple of months old because I've seen it before, but it's just disturbing because they just have no problem being out in public and talking about what they got planned.
That's also, of course, true with COVID, right? We are all only as healthy as our neighbor is on our street, in our city, in our region, in our nation, and globally. And did we solve that? Like, did we actually manage to vaccinate everyone in the world? No. So highlighting water as a global commons and what it means to work together and see it both out of that kind of global commons perspective, but also the self-interest perspective, because it does have that parallel. It's not only important, but it's also important because we haven't managed to solve those problems which had similar attributes. And water is something that people understand. You know, climate change is a bit abstract. Some people understand it really well. Some understand it a bit. Some just don't understand it. Water, every kid knows how important it is to have water. When you're playing football and you're thirsty, you need water. So there's also something about really getting citizen engagement around this and really, in some ways, experimenting with this notion of the common good. Can we actually deliver this time in ways that we have failed miserably other times? And hopefully we won't keep failing on the other things, but anyway.
I don't know her name, but if I were president, I would have SEAL Team 6 go get her. And I would want to know, what are you talking about? Who's empowering you? And what are you planning on doing with our water? So what she's talking about is that, you know what, our attempts to control the population and vaccinate everybody with these shots, that didn't work. We need different levels of control. So that didn't work. Now we're going to simplify it because climate change, you know what, that may not be doing so well now. It's too abstract. We got to simplify it. Everybody understands water. What do you plan on doing with our water? What crisis do you plan on doing with our water? I want to know. I don't know who you are. Sounds American. I want SEAL Team 6 to pick this broad up, and I want her deposed. What do you plan on doing? And I want everybody that she's spoken to about this captured. I want them brought in and deposed. The level of criminality here is just astounding, and they feel entitled to be able to say this in public. It's incredible. And this is why my YouTube channel is shadow banned. Let's go to some comments. Rumble has a lot of room to grow. Remember that? Oh, yeah. They have a lot of room to grow. Looking forward to helping out with social. Oh, yeah. Yo, go back. Yeah, you know what? You're right. I don't know, but have you changed your mind? I've changed the name of the channel a couple of times. No, they didn't help at all. Not a wink. You've got plenty of clips to work with. I do. I have a lot of them. Yep. I just need to hire a good editor and get that out there. Yep. Corruption. It's crazy. Why I saw you corrected here. Well, why aren't these people in jail? There's no accountability. There's no accountability. And the lack of accountability, the lack of law, the rule of law allows these people to run rampant. He's right. What's going on now makes Watergate look like a child taking a grape from a fruit stand. No doubt about it. No doubt about it. This woman is a demon threatening the world's water supply. 1,000 children unaccounted for in Maui fire. Yeah, it's disgusting. It's disgusting. Bob for president. Thank you very much. Yeah, I don't want them going in my closet. I would not pass the muster. So no, I'm okay. I want to just fly. I'll just stick with the YouTube shadow banning. All right, let's move on. So we mentioned that earlier that we have a trailing PE multiple of near 30 on the S&P 500, but the analysts, this is from Game of Trades, caution analysts are repeating the same mistake they made during the 2008 financial crisis. Leading economic indicators are contracting sharply. And case in point, this is a chart of Maersk, the largest shipping container company in the world. This is their share price. This is a monthly chart. Double top, breaking down, and probably going to go a lot lower. Last time this preceded a significant decline in the markets and a lot of economic volatility. This is a major warning signal. So we have in blue revisions being guided up. However, overlaid in black are leading economic indicators which continue to decline. You had a little hockey stick up there, but clearly we don't have a uptrend. We're still in a downtrend on economic indicators, yet earnings revisions are being revised up higher, and you have forward-looking PE multiples at 5, 10-year moving averages. So if you look at the forward-looking guidance of analysts on the S&P 500, that forward-looking PE, it looks very, very reasonable for stocks to move up higher. I don't believe in trading the markets that way. I want to know what's been reported because it's a known, it's a fact, it's in the books. I don't want to trade on hope. I'll keep it in the back of my mind, which is the reason why I closed out shorts and chose not to fight the market going into the new weekend. But I think there's a little bit too much in terms of enthusiasm for the forward-looking PE of the market. Now, Ed Yardeni's a fund manager. Bond vigilantes and their concerns have retreated, clearing the way for S&P 500 to rise to our targets of 4,600 by year-end 2023 and 5,400 by the end of 2024. That's a massive move. I don't know what that is in percentage terms. That's a massive move. So now we have the downgrade of, we've stabilized here on the S&Ps. The downgrade of our debt markets, I wanted to check back in with the 10-year yield. The 10-year yield is holding firm here on gains, but not much has changed since we last checked in. So the reason why I'm checking back in is that I think what Ed Yardeni is saying here is that we've seen the peak in the 10-year yield, and if that's the case, that provides room for the S&P 500 to run up higher because they've done cost cuts, et cetera. They've gotten smaller. They're doing more with less, et cetera. And that'll make them lean and mean so they can absorb the higher interest rates. And besides the fact they're not as indebted to, I shouldn't say indebted, they're not as reliant on the debt markets as our smaller S&P, Russell 2000 names. They don't need to worry about going to a bank to get money. They have plenty of cash and they can issue debt. So they're good. So we knew this going in. U.S. credit rating outlook changed to negative by Moody. So what I did here is I took a look at the reaction by the stock market and the bond market to the second downgrade. The first downgrade was by Standard & Poor's back in 2011. Fast forward to August the 1st, 2023, Fitch downgraded us, and the reaction by the S&P 500, the immediate one for peak to trough, was about a 5.7% decline before we rallied back to close out the month somewhat stronger and nearly unchanged. It's down slightly on the month. However, we continued to roll over, and we saw a decline by the end of the month. Actually, I'm sorry. What did I do this for? Or to where we closed on Friday, we're still down 3.7%. Even though we had that big move last week and really November, we're still down 3.7% relative to where we were immediately prior to that Fitch downgrade. Now, you may be looking at this chart and you're saying you're maybe oversimplifying, you're blaming it all on Fitch, and it's fair. I mean, right here on the 27th of July, after a very, very nice rally, summertime rally or springtime rally, we had an outside reversal bar indicating the market was tired and that we may sell off. I think that Fitch rating was probably the catalyst. So then you take a look at the 10-year yield and you say, okay, what did it do that time frame? And what it did for the month of August, it net from open to close, it was up 5.2%. The big deal here is that it continued to rally. We saw from the lows of the first to the highs of November, we saw a 25.3% increase in the 10-year yield. And that's what kept the lid on the S&P 500. And even though we've pulled back on interest rates, we're still 14.2% higher than where we were on the 10-year before that Fitch downgrade. So if in fact that Fitch downgrade was a catalyst to send yields up higher, well then that case for, you know what, we may have a peak in yields, that argument may be on a little bit of thin ice. I'm not saying that we're going to see new highs on the 10-year. I'm just saying that getting your rating cut by now the third big ratings agency should not decrease your borrowing costs. Your borrowing costs should go up because we have communists that are running this country that are spending us into oblivion. All they want is war that we have no interest in whatsoever. And every single Republican candidate out there, with the exception of Vivek Ramaswamy, is pro-war. All they want is war. That's the only thing they have in common is they want to go to war, even though we're bankrupt. And that's the Republicans. We continue. So what's the Federal Reserve going to do here? They can't do anything. As a matter of fact, I want to take a look at the Federal Reserve or the CME Fed Watch tool. I meant to bring this up to see this is so we saw a probability. Let's get out of December. They're not raising rates in December. Let's go to January. So the probability of no rate hike in they took the calendar away. I can't believe Windows 11. It sucks. What's today? 12th. The 10th was Friday. Okay, so this is current. All right. So on Friday, there was an expectation of no movement by the Federal Reserve of 77.7%. Now, after that downgrade, that's dropped down to 71.7%. Now, what I'm looking at here is now a probability of not just a quarter point, but a half basis point rate increase go from 1.3% now to 2.3%. This was non-existent a few days ago. A few days ago, 1 week ago, it was 0.2%. Now, 7 days later, 2.3%. Still very unlikely, but growing. The probability of a quarter basis point rate hike, that's gaining some traction. That was at 1 week ago, 8.6%. On Friday, it was 21%. Now, 26%. So you can see the trending here is not favorable for those that are betting that the Federal Reserve is going to stay pat. The odds are still favoring them being accurate, at least going out until January. But this was non-existent for January a few days ago. March was when they were expecting. I'm sorry, I misspoke here. I was thinking rate cut. So the rate cut has now dropped in March from 12.4 to 11.5. And that is what the markets are hoping for. They want that rate cut, and that'll drive equities through the roof for a while anyway. A short while. So this is very, very fluid right now, the expectations of what's going to happen with interest rates, but odds still favor no rate hike now through March and no rate cut. All right, so the Fed has no plans and is just hoping for the best. I shared this already. The movement of goods overseas. Maersk put out a report the other day. They've never seen anything like it. Worse than the financial crisis, worse than COVID, they're reporting. So I expect that this is only going to get weaker, and it could be construed as being deflationary. So it's going to be very interesting to see what happens to the US dollar here and to gold in particular. If deflation becomes a concern and yields continue to pull back after this ratings downgrade, that's a tell. You know, that's one thing I would be looking for. If yields don't move up higher and yields actually move down, even though all three credit rating agencies have now downgraded our debt from AAA pristine ratings to a lower grade. In fact, Moody's called it negative outlook. Here, change to negative. That's a bold statement. So watch this. And this is one thing. You'll know when you're growing as a trader, when you go into a knee-jerk reaction type scenario. And the knee-jerk reaction is usually the wrong reaction. You'll come to learn that. So you never when a Fed announcement comes out, the knee-jerk reaction, either up or down, it's probably going to reverse. It's usually the wrong one, 9 out of 10 times. Not always, but 9 out of 10 times. So this here, for the average investor, they're going to think that this is a very, very bearish event. Stocks should go down on it. Yields should spike up higher on it. The dollar should go down on it. But what if the equity market continues up higher because yields are dropping down lower? What do you read into that? Well, what you read into that is that negative economic data is coming down the pike. The markets are pricing it in. And the markets will anticipate a Federal Reserve cut. And that's why we always visit the Fed Watch tool, because it may not reflect it automatically, but eventually it's going to show us signs. So it's going to be very interesting as we go into the new trading week, the reaction of bond yields and equity prices. If they don't do as you would expect them to do, meaning equities go down, yields go up, something's wrong, very, very wrong with the economy, globally and domestically. What else? Bitcoin reacted very, very favorably to this downgrade. And it's negative now. It reversed. It was up earlier. But I like this setup on Bitcoin. I think this breaks out. Monday is my dollar cost averaging day, so I'll be buying more tomorrow. So Bitcoin looking really good here. What else do we need to go over? Oh, Cocoa Mayhem sends prices to 4,000 a ton, the highest since 1978. I purposely skipped over this because it's an amazing chart. Here is the weekly chart for cocoa prices. Amazing move up higher. This is what live cattle looked like only a few months ago. Let's go back and check LE. Love this. Beautiful. Breaking down. Awesome. Okay. We did that. Let's talk about some watch stocks. And I did a live stream yesterday. That was the topic was dealing with a rough week. And I did my boohoo moment, and I'm completely over it now. And I'm ready for the new trading week. But we didn't lose money last week, but I was up a lot more on the week on Thursday night, and pretty much all of it was given back on Friday. I was so ticked. I was so ticked. So yeah. But I'm ready for the new trading week. We have a lot of capital to deploy. There's news out of Moody's is going to have me, taking a more cautious approach than what I would have had this news not broken. So let's see. What could be a sign? I think the ultimate sign for a pullback in the S&P 500. Let's bring it up. So this is a 15-minute chart. Let's go to a daily chart. So it's a good question. So we closed out the week. It's important to note we closed out the week right at a resistance level, right at a volume bar. So while I closed out my shorts, I have little doubt that we're going to get some sort of a retracement this week. And I'll probably add to longs depending upon the price action of the market. If it feels wobbly, if it feels heavy, I'm just not going to do anything. I'll go market neutral as I like to do, and we'll just focus on cash flow. And we'll just sell premium. Now, the first price target I would be looking at using the spiders would be 437.32 on the spiders. You don't want to see a break of that support level because that probably means that if we close down below that mark, we're going to head down to 4,200. Now, 4,200 is the pimp Mac Daddy of all support levels for the S&P 500. If that goes, then you're probably going to want to be looking to lighten up on equities, maybe put on some shorts. If you're very, very nimble, a close below 437.32 would probably have me nibbling to the short side and adding aggressively on a breakdown below 4,200 on the S&P 500. So hope that answers your question. Wife and I are looking for a home to buy, and we talked to an agent whose lender is offering an interest rate buy down. Ah, really? That's interesting. Just watch out for the fees. Watch out for the fees. But good luck with that. Let me know how that works out. DeSantis is a disgrace, and so is Ted Cruz. Both as we don't have time for that stuff here. I think that DeSantis is a good governor, but he just the Bush team got to him, and they screwed up his presidential bid big time. He screwed up. DeSantis screwed up. Let's go. D-Dog. Are there still sellers left from this 118 nice peg flag? We'll take a look at it. I got to go to the members area. I got to make sure that I get to them too. If we have any. If you have a couple of symbols that you want me to go over, I don't have a lot to go over here left. So if you want symbols, we'll talk about some symbols. And first, I got to check the members area. We'll do D-Dog, Ticker Cloud. No, not that much to go over here. So I know that somebody had asked for, I believe it was USO, and we'll do D-Dog. Datadog. Good looking chart. Let's go to the weekly chart first. Oh, we got a little bit of resistance up there. And this is why we begin with the weekly charts or the monthly charts first to give that higher level view. So you never want to just go looking at a stock on a daily view and say, okay, I'm going to buy it here. First, you want to see where it's at on a macro view. And we did close back above 101.97, which was the pivot point. So good price action here. I would be a buyer on a retracement. Down to that level. And I could put my stop loss right below it. Folks, we're using TrendSpider. You could probably still get their Veterans Day sale or Black Friday sale using the link below. So weekly chart, we need a pullback here. Volume is very, very good. RSI is strong. I'm liking the stock. Daily chart, again, a breakout here. We need that retest. Ideally, 1 or 2 days of consolidation along that support level. That would have me as a buyer of the shares. I would be nibbling across the support level. I'd be adding on a continuation breakout. So D-Dog looking very, very good. I like it. USO, I think it was. USO, yeah. That was for RB, USO. So oil, it bounced off of the lows of the week last week because you had support immediately below. I still think that you have more downside here. This is what I call being on the opposite side of the mountain. So what does that mean? It basically means that here's your walk up the mountain, right? You're at the top, you're having your picnic. All of a sudden you want to go home and you're going down the mountain. So I'm not a buyer here of oil. I wouldn't short it, but I would not buy it. And that holds true for the energy names as well. We did see a bounce on Friday. This is a bounce that's to be sold. It was an oversold bounce. I would avoid this. I think that we do press lower. Even with the weaker U.S. dollar, you couldn't oil in the pre-markets here are not catching a bid. In fact, they're selling off. You got it, Larry. TTD. The trade desk. Weekly view. Wow. Bloodbath. So what they may do here is they may do a rally and try to recapture $68 a share. I would be shorting into that retest of $68 a share. If it closes above it, then I would stop out. Then I'd be watching for this line I just drew, which is now the upper band of resistance. And the ideal short here, if you want to trade price action, is if they gapped it up strong, up and into around 60, let's say $70, give or take a dime or two. They rallied up into that level. I would be shorting on that strength. That's a classic contrarian trade. We'll keep a little bit more sensitivity on here. And the bet is that we're going to rally up and into that resistance level, and then the shares drop. Or you could do the same thing here if it doesn't get that far, and we'll keep a little bit of sensitivity on there, not much. And we're good to go. We set it and forget it. If it fires off, it fires off. It doesn't, it doesn't. Daily view. Wow, what a move lower. That's brutal. So, yeah, the classic move here. What I would be looking for here, I would not short this stock where it closed on Friday. Why? The reason is that you have support, a lot of support immediately below here. You got to hope that they spike it next week up and into these resistance levels that we have alerts set at, and then you short into that resistance range because you have a lot of supply up there. That's the shot. That's the play. I would not short here. You may get a dead cat bounce off of this oversold condition. We are trading down below. Is this the 2 or 3 standard deviation? I think this is only a 2. This is a 2 standard deviation Bollinger Band. So it can go lower. So I'm not a buyer here at all. I would, if anything, I'd be shorting on a rally, but a strong rally. AMZN. Amazon is one of my favorite picks going into the new trading week. Great earnings. Strong price action on those earnings. They haven't given anything back. And we broke out last week. Now, if they retrace this, I'm a buyer. Or I'm selling puts, which is a bullish bet. I just canceled it. Oh my God. Okay. Touch, bounce, good to go. All right. So Amazon, bullish. You know, I like a side of SQQ. Not just Bitcoin, the whole crypto sector is ramping. Oh, yeah, no doubt about it. Yeah. I think even Coinbase had a good week last week. Yeah. Really nice price action. This is going back up. I like Coinbase as well. TTD came back last Friday, though. Yeah, don't. It's a shorts covering ahead of a weekend. I would avoid this. I gave you my thoughts on it. Small caps. Okay, we can do small caps. I'm curious. Now, on the week, they just did not perform. This is a market led. You know, some things haven't changed here. All right, this is a market that's led predominantly by 7 stocks. The small caps did not participate. They probably will lag. A lot of people are calling this a new bull market. It's not a new bull market. New bull markets are led by small caps. Small caps generally lead the new bull market up higher. This is not a bull market. Nothing like it. Small caps are weak. If yields move up higher, they're only going to get weaker because they're highly, highly sensitive to interest rates. So I don't like the small caps here. They did not break out last week. They behaved very, very poorly on a relative basis. Daily chart, okay move. Maybe we have a higher high here. Maybe they'll put something together. If you're going to dollar cost average in on them, I got no problem with that. But we are in a triangle formation. Maybe they'll break out this coming week. But right now, based upon this chart, I'd wait and see how yields settle out. Do they shrug this off, this news off, or is there something there? And that we have to really be careful of interest rate sensitive names. CRWD, CrowdStrike. Really good stock. I mean, I love this stock. Looking really good. It's broken out above resistance. I think it goes higher. The wind is at its back. There's no doubt about it. So here's your upper band of resistance. I think that this stock could rally up to 206, 208, maybe even a little bit higher than that. Daily view. So the chart looks good. You do have a little bit of resistance immediately above here. But again, I think it's got the wind at its back. Volume could have been a little bit better on Friday. But if we do break out and close above, let's call it 198.50, I think that we're heading up to the low twos, 210, 208, 210. So that's CrowdStrike. Do I like the stock or I don't use their products, so I couldn't comment on their products. I know the younger generation does. Robinhood has a crypto wallet, and eventually we'll do NFTs so traders can play regular markets, blockchains. And let's check out the stock price. That's really the only thing I could speak to. The stock price it's very beaten up. But on a weekly time frame, it looks like it wants to go lower. So I'm not loving the share price here. So I would avoid the shares. Once we could revisit it, see when it bottoms out. And if they have an edge over their competition, I mean, then so be it. Crypto is for real. It's becoming widely adopted. You had all the big players out there, the Jamie Dimons of the world, for years, hammering it down, bashing it. Now all of a sudden they're rolling out ETFs and everything else on it because they loaded up. They didn't have a position. They beat it up. Now they're net long, and now they're going to build it out. Twilio. We broke out on Twilio. This stock has been decimated. Wow. Monthly chart. I'm a buyer of Twilio here. I like it. Especially on a close above $75.50. $75.50 a share. I'd be a pretty aggressive buyer because this thing could really rip up higher in a short period of time. So I'm liking Twilio, daily view. We closed right at a resistance level. On any pullback here, I'm a buyer of Twilio. I'm bullish. Okay. I see. Okay, gotcha. Yeah, I would avoid right now. You bet, Yoga Mac. Best market beat on the thank you very much. Pete, you're welcome. Everybody have an awesome night, a profitable trading week, and I will talk to you throughout the week. Members, tomorrow morning. I'll see you there. Be well.